Hey guys, what's up? It's me, Jonathan, and welcome back to Money Talks, where we want to offer you financial information and meet you where you are financially so that you're able to stick to your budget, manage to pay off your debt, and begin to save on your path to building wealth. Today, guys, I want to help you kind of walk through what typically is included in your closing costs. What does each piece kind of mean? And yes, in these different pieces, they can vary depending on who you go with lender and what area of the country you're in. So I'll try to notate that as we go along. If this is your first time joining me here on the channel, go ahead and hit that subscribe button and you'll be notified every time I upload a new video. So today, guys, I thought it'd be helpful because, like I said, there's a big boom right now for refinancing your home, making a purchase, things of that nature. And as you know, I did recently just get my license, so I want to share that information with you so that you can understand how to go about your biggest purchase that you'll make in your financial life. So, number one, the typical fee that people have to pay that's part of your closing costs is the origination. So the origination is basically what you're paying that particular lender that is doing your loan to actually do your loan. So if they're doing the close, setting up the closing, taking your application, all those different things, that's typically involved in the origination fee. So really look at that fee, and you have to compare that cost again with different lenders. Don't get so granular of how much you're paying for each cost as much as, notice which one you're paying more, notice which one you're paying less. But ultimately, if you're paying $4,000 in closing with one lender and $11,000 in another one, you should be able to identify very quickly where you're spending extra money. The second cost I want you to understand is appraisal. Now, during this time of the pandemic, there has been an appraisal waiver program, but that's mostly dealt with what Fannie Mae and Freddie Mac may have as far as information on your loan. Some people, if you're getting cash out, you could potentially get the waiver, but oftentimes you will likely have to pay. So when you look at the appraisal, that typically is a general standard cost based off the averages in your area. Appraisal is one of the first costs that, again, depending on where you stay, could cost you more or less. So if you're in California, you might pay $625 or $650 for an appraisal. Washington, that type of cost. If you're in Texas, if you're in North Carolina, if you're in different states, you could be looking at $450, $475 for that cost. So it really is typically the area that you're in and what you're paying. And that can go for purchase and refinance. Because again, this is a standard feature and standard process within buying a home or even refinancing a home. Third cost I want you to kind of get your head around is the title insurance. Now, the title insurance, yes, it does protect the lender, but this is so that if there are any repossession, if there are any extra liens, if there are anything of that nature, that protects the lender as they're going through the process. So much like PMI insurance, you're paying it as part of the process, and it's not really a negotiable because it is a standard piece, but it is to protect the lender. Now, the good thing about title insurance is legally you can actually search for your own title insurance. So that doesn't mean that just because you have that lender that you have to go with their title insurance. No, you can actually go find your own and go and supplement that piece in, especially again, if you get a lower cost. So that's a piece you want to be aware of. Then next you want to think about, hey, are you escrowing? If you're escrowing your taxes and insurance, then typically in a refinance, right now if you're refinancing, this is what you need to be aware of. Typically they collect 2 months of escrow payments to start your escrow account. And when they do that, you may say, hey, my lender already has an escrow account. Well, whatever's in that escrow account, that will be refunded back to you. But because of how this process works, the new lender who you're refinancing with has to set up your own escrow account, and they have to pre-fund it, and that's usually added to your closing costs. Now we're in a special time of the year, so a lot of times people have paid taxes or are paying taxes. So if you have a large balance in your escrow account now, that could mean that your taxes are getting set to be paid, or it might be a while before they get paid, and your lender who you're refinancing with will have to collect for that up front. But again, it kind of washes out because the money is coming back to you. So just keep that in mind. Like I said, it's not to make you a shot, but to be aware of what's going on in this process. So those are typically the main costs that are associated with closing. So when you look at these fees that are going on, here are some things that I have seen that people and lenders can particularly charge, but much like the dealer doc fee in a car purchase, these fees aren't really necessary, and not everybody charges that. So some lenders charge a application fee. So you may not lock the rate with them, you may not move forward with them, but just because you did an application with them, you have to pay an application fee. The second thing that people may actually charge you for is a prepayment penalty. So if you decide to pay the loan off early, they may charge you a fee for that. These are things you want to look into before going down and committing yourself to this contract so that you know what you're aware of. The next thing you want to be aware of is some lenders charge you more in an interest rate because you may do a escrow account with them, or you may not. So that again is another fee that you want to be aware of, because that can affect what you're paying overall in the cost of the loan, especially because interest is charged on your balance. These are things I want you to be aware of as you're, again, in the biggest deal that most people will make, in the biggest line item of their budget. This is important for you to understand because, again, when you make a purchase on a house, you make money on the buy. If you're refinancing, you make money on the refinance. So I hope this information is helpful for you. And if you like this video, go ahead and give it a thumbs up. And if you haven't already, please subscribe to the channel. And I can't wait to see you guys in the next video.